Your administration has made a great deal about people returning to the workforce, workers coming back. The participation rate is lower. Is that a big disappointment for your administration?
Look, don't obsess on any one number in any employment report. As you know, we revise them from month to month. But look at the overall trend here. The overall trend is really good. Since Inauguration Day, the U.S. rate is down 1%. We brought back over close to 200,000 people that were sort of dissatisfied or underemployed in the U.S. workforce. That, to us, is a really amazing trend. So there is some very, very good news in this labor report. As you pointed out in your opening, we're down to a unemployment rate that we haven't been down to since 2001. The trend is very good. The trend is a trend that we like a lot. That said, we still think there's an awful lot that we in the administration can do, and we're working on that. We're working on, regulatory reform. We're working on tax reform. We're working on infrastructure. All these are areas, as we continue to improve, we're going to continue to draw more and more workers back to the workforce, and we're going to improve wages.
Gary, why doesn't the bond market buy it? Treasury yields are grinding lower. 2s10 spread, you know the market as well as anyone, is about 80-something basis points. 2s30s is 154. The market's not buying your story. The signal in the Treasury curve is that inflation, reflation, growth, that story that you're telling me right now isn't real. So why do you think the view at the White House is kind of difficult to reconcile with the view of the bond market right now?
Well, look, you're getting a bunch of divergence. The equity market's clearly telling you a different story. We had the equity market at all-time record highs last night, basically across the board. You had the equity market open up higher today. We're in a period of sustained growth, and the market's telling you we're in a period of sustained growth. As I said before, we think there's still a lot more we as an administration can do to drive the economy. And I think the bond market's telling you that there's more we can be done to drive the economy. And the bond market's saying, look, we're ready for you to drive this economy, and we know that there's opportunities here, but we're happy to own bonds in the meantime.
Well, Gary, let's take it further. Let's take your example and look at the equity market. The equity market was buying your story in a big, big way. The financials really showed that. You saw the likes of Goldman Sachs, your old company, doing terrifically. The story over the last couple of months doesn't spell out a success for the Trump administration at all. Bank stocks are down since they peaked back in March. The performance, the outperformance, has come from a handful of companies. The Facebooks, the Amazons, the Googles, whose path is completely independent of anything that happens down in DC. So how can you say that a record high in the equity market is anything to do with what your administration is doing right now?
Look, there's a record high in all of the across-the-board indices. So however it's being driven, there's a record high. It means investors are creating wealth. The president said yesterday we've driven over $3 trillion of wealth into individual investors, into endowments, into trusts. We're creating wealth by people owning equity assets in the U.S. market. We've got broad consensus across the market. If you own the indices and you own index product, which is what a lot of investors own in the world today, they are benefiting from what's going on in the market. They're benefiting from the appreciation. If you go back to November 8th, which is the day of the election, and you look at market appreciation, it's been pretty broad brush across all of the indices.
Yeah, but Gary, like to John's point, if you take a look at banks, they're not participating. That shows you, how can you have a rally if banks don't participate that's actually sustainable, if it's underpinned by something with not enough breadth?
I think there's breadth there. I mean, go back to November 8th values and tell me if there's breadth or not.
Well, I would say not right now. I would say the leadership is utilities. It's going to be real estate. It's going to be bond proxies. It's not going to be the industrials or materials or banks, Gary.
Well, look, if you want to pick any sector or any silo of the market at any given period of time, you can. If I was on a month ago, we would have been talking the complete opposite. I'm not going to sit here and debate market moves over a 20-day market period. We've got to look at this in the longer trend. I'm going back to November 8th and giving you the trend, and I like the trend.
So, Gary, let's talk about something that really is more within your power, and that is tax reform. We've talked about it before. We've had an outline, one-page outline. There are rumblings up on Capitol Hill, it will shock you to hear, that in fact the White House might be dragging its heels a little bit. They're waiting for some leadership out of the White House. When are we going to have a specific proposal that goes beyond that outline that people can look at?
Well, look, as you know, because we've said this quite publicly, we are actively engaged with both House and Senate leadership in working out a tax plan that both the House and the Senate and the White House are going to agree to. We are going to release our tax plan when we have negotiated with those groups and there's consensus among all of us. In the meantime, we are holding a variety of listening sessions with industry groups, with leadership groups, with governing groups, all around to get as much input as we can. We think the most effective way to get tax reform done is when we release a bill, to have a final bill done and not be negotiating on the floor of the House or the floor of the Senate, to have a bill done that we know there's consensus, uniform buy-in when we release that bill. And that's where we're headed. We said to everyone in the beginning, this was going to be a long process. We would get to it towards the end of the year. We were committed to get tax reform done by year end.
So you're still committed by year end to have tax reform done?
We're working as hard as we can to get tax reform done this year.
Okay, finally, monetary policy. I know that's not directly within your purview, but what's the thinking that you have right now, and for that matter, the president has on monetary policy? Is it in the right place? Is Janet Yellen the right person for that job?
You'll have to talk to Janet Yellen about monetary policy. That's her prerogative, and she's an independent agency of the government.
Do you favor her staying in that role?
Again, we're not at a time where we're going to even be thinking about that. Her term runs into next year, and Janet Yellen is running the Federal Reserve right now.
Would you want to?
Would I want to?
Yeah, they came to you and said, hey, Gary, would you want to do this? Would you?
I have a great job running the NEC right now. I get to come in and work in the White House every day. It's a dream come true job, working as an advisor to the president. I'm very happy.
So doing that job, did the president do you a favor when it comes to jobs yesterday with his decision about the Paris Accord? Is that going to make your job easier or harder in terms of employment? Because there's a lot of talk that maybe that actually may hurt on the job front.
Look, the way we're going to drive jobs and job creation in America is we're going to fix the regulatory environment, we're going to fix tax policy, and we're going to drive infrastructure. Those are the core principles. We, as you know, we have had many, many different business leaders into the White House. And uniformly, they've come in and said, those are the three areas where the United States needs to improve the situation for us to drive employment and drive business opportunities and drive wages and drive labor opportunities for Americans. That's what we're committed to do, and that's what we're going to do.
But Gary, aren't there a lot of good-paying jobs potentially within the renewable energy area, which actually employs a lot more people than coal does right now, for example? So isn't that actually an opportunity to drive the economy in renewable energy?
We are agnostic to where the jobs grow. We want jobs to grow everywhere. We want jobs to grow in the coal industry. We want jobs to grow in the renewable industry. We want jobs to grow in the technology industry. We want jobs to grow in manufacturing. We want jobs to grow in service. All these areas, we love all those areas. We want jobs to grow. We want jobs to grow. We want wages to grow. The one thing we didn't talk about was we didn't talk about wage growth. We've had stagnant wage growth for 2 years now at 2.5% per annum. That's not good enough. We're not putting enough disposable income back in our consumers' pockets. Our American citizens deserve better wage growth for that, and then they become better consumers. We don't care where the jobs get created. We need more jobs to create more competition for more labor to increase the standard of living in the United States.
Gary, you took it there. So just very quickly, I want to put the beginning of the conversation together with the end. How do you anticipate getting the participation rate up and wage growth up as well?
We're going to get the participation wage and wage growth up by clearing the opportunities for American businesses and American business leaders, by getting rid of the regulatory incumbents, regulatory obstacles that they have. There's so many regulatory obstacles, by making us more competitive, by lowering our corporate tax rate, and we're going to improve our infrastructure, which is going to make us more globally competitive. Businesses are going to want to move their business back to the United States. Therefore, when they move their business back to the United States, they're going to need to hire more workers. When they hire more workers, there'll be competition for labor. As there's competition for labor, you drive wages.